Hey everybody, thanks so much for joining me today. My name is Jeffrey Tesch. I'm Managing Director of RCN Capital. Today, you are attending the REI Facilitator Virtual Conference. I am going to teach you how you can use private money to make more deals happen. That's what we're getting to today. Can't wait to share everything with you. Here we go. Good afternoon. My name is Jeffrey Tesch. I'm Managing Director of RCN Capital. We are here today to teach you on how to make more money originating loans that you had previously thrown away. We're going to drill down on educational points on the state of the marketplace, how this marketplace is already in your communities, and how you, the originator, can make more money. Let's get started. So it really has been a perfect storm for the single-family investment market. Credit standards are at an all-time high. Home prices have been steadily increasing. Rental options are fewer and fewer because of the increase in the various options. Student loan debt is unfortunately accelerating, and financing options have increased as well. In addition, we've seen a decrease in building permits, the unemployment rates are at record lows, and vacancy rates have come down to alarming numbers. The desire to own a home, surprisingly enough, with the state of the economy as it is today, is at an all-time low. Many of these factors are increasing opportunities in the non-owner occupied investment space. So let's take a look at this slide. This slide's really cool because what it shows you is where we were before the crash and where we are today. And obviously you can see there on the single family rental detached, there were so many units being built that the supply was way outstripping the demand. But look what happened. And this just goes to really exasperate the problem, which is in many communities across the U.S., there is just not enough single family housing at all. To add to that, the home ownership tenure is increasing. So if you look, once again, back to the start of the crash, 2008, 2009, folks were staying in the home for 4.5 years. Now look where we are today. We're up over 8 years. When the houses aren't turning over, there is less supply for folks entering the single-family marketplace. Once again, this is adding to more folks choosing rental options. So as I stated, there's tremendous opportunity in the space. From 2006 to 2017, over 5 million single-family homes have been transitioned to owner-occupied rentals. That's crazy, right? Single-family homes comprise more than 1/3 of the U.S. rental properties. So what you want to think about there is, usually when you think of a rental property, you think of an apartment building or a condo. But the reality is, out of all the dwellings, single-family homes comprise 1/3 of all of those rentals out there. And even more surprisingly, it's an individual investor that holds 74% of those rental properties. This is one of the best charts that I'm going to be sharing with you today. And I really want you to take a good hard look, starting on the top left, under segment of 1. Over 8 million investors. That's right, 8 million investors have a segment of one property in their portfolio. This is over 50% of all the homes that are being rented out in the United States today. It's a tremendous number. But really why you should be sitting up in your seat and taking notice is all of these investors purchased these homes at some point. All of these investors most likely needed financing at some point to own these homes. There's a huge opportunity for mortgage originators to get into this line of work. Let's talk a little bit about cities and where we are with the post-recession home appreciation. Now, on the right-hand side, these are a bit exaggerated. So if you look at the average home price in early to mid-2009, Detroit, $47,000, San Jose, $395. Now, certainly Detroit, we know, was one of the toughest areas hit across the U.S. But even an area such as San Jose that was still doing relatively well with the technology in California, it's amazing just how much these properties have come up in value. You expected Detroit to rebound, but look at San Jose. It's almost quadrupled in value. And then on the left-hand side, you can see the various numbers. And it's a lot of the usual suspects, right? Florida, Arizona, California. But it just goes to show you how single-family home investing is really, really beginning to pay dividends across the U.S. So if we look at the sales by state, right? This is the latest data that we have, full year 2017. Investor-only sales, California, Texas, Florida, Illinois, Michigan, New York. Many of these areas are super hot. Some of that's because of the population centers as well. But even if you go to the next tier down, such as Tennessee and North Carolina, these areas have really begun to become investor-centric areas. Very interesting how this is transitioning. And then, of course, market share of flipping by state. A lot of the usual suspects again. California, Arizona, Texas, Florida. Some areas that weren't highlighted in the last slide, a lot of the Rust Belt areas. Pennsylvania, upstate New York, Ohio, Indiana, Illinois. A lot of these areas that saw homes fall into foreclosure and short sale, the values have appreciated. Unemployment is down. And folks are looking for good, clean, single-family housing. A lot of this housing, especially in the Rust Belt areas, is known as workforce housing, meaning it's for an average family. There's money to be made. So you as an originator, how do you capitalize on these opportunities? Well, first off, you really want to do your research. You want to understand what type of marketplace you belong in today. You know, what is going on where you are currently operating your business? One of the groups that really focuses on real estate investment is called REIA, R-E-I-A. Google that in your area. Every community across the nation has REIA groups. And what these real estate investment associations are is meetups. They meet typically once or twice a month. And it's where investors come to meet and get education, as well as meet other like-minded folks. Go, learn about what's happening in your area, and you will find that they are thirsty for capital. Next, select your target market. You want to understand what your target market is and how you can build out a program that makes sense for your target market. Next, determine your own investment strategy, right? How are you going to invest in your business to promote these products? And then finally, find a proven lending partner, such as RCN Capital, of course.